Bill, good to see you this morning. I mean, listen, with all due respect to the Fed chair, I mean, we had, what, 8 Fed speakers? I'm getting, I mean, a little ridiculous on the Fed speak. Speak once a quarter and then come back. That's my opinion. Anywho, nobody cares what I think. What do you think? Do you think the Fed has got our back and they're going to make sure that the stock market does not slide?
Well, I mean, I don't think it's slid enough for them to really jump in hard yet. I do think they're continuing to talk what they have, right? They've been pushing for some sort of fiscal stimulus, or I should say additional fiscal stimulus and support. Obviously, with the election coming up, that doesn't seem like we're going to get to a deal necessarily here, maybe until after, if then. And I think part of what they're seeing is clearly third quarter GDP is going to be a very strong number in terms of the growth. It's the fourth quarter that becomes more, I'll call it normalized, where it's likely to grow, but obviously come way off that really fast move. And frankly, the crystal ball gets pretty cloudy at that point, and I think that's really what they're saying.
Yeah, Federal Reserve and their now almost daily multiple speeches aside, Bill, what are you advising clients to do? Are you worried about the sell-off? We're down 5 or 6 days in the S&P. Sell-offs are healthy. They are healthy, but there's a lot of concerns coming up about the election. What's our smartest play right now?
I think I'll do this election first. I mean, I think the one thing, I mean, I've said it I'll say it every election, that it doesn't make sense to invest according to your political views. It hasn't, it didn't make sense when Obama took over, didn't make sense when Trump took over. I would be very careful there. There may be sector changes and some other things that we want to think about, but making big picture bullish or bearish calls to me doesn't make a lot of sense here. I think the one thing I will say that makes me feel a bit better, obviously I never enjoy a sell-off, but the value side of the equation, the high dividend side of the equation, still did a bit better yesterday. So why does that matter? I think it matters because if, in fact, the worry was that the economy was really caving in, you would likely see those perform significantly worse because they have more debt, they're, frankly, lower quality, all those kind of things that make it so that what we saw in the worst of the lockdowns, that they perform worse, would likely happen again. So I think that's maybe the underlying decent news here.
Yeah, I'm going to say something that political junkies probably don't want to hear, Bill, is that politics really doesn't matter that much for the markets. The markets probably matters more to politics, and we've got that coming up on our RBI a little bit later on. Smartest play right now is what?
Well, I think one thing where you play where the puck is going to go, we'll go with the NHL playoffs. I think thinking about some stock dividend strategies makes some sense here. As I mentioned, they've underperformed during this kind of during the pandemic. I think people are going to realize, maybe they already realize, interest rates are going to be low for quite some time. The best place to get some sort of yield, or one of the best places, is certainly the stock market. So I think that's one interesting place to look right now.